Hello, I'm Chris Blasi. Welcome to our first video of 2017. Like our previous videos, today we will also take a look at matters important to investors who are either currently holding precious metals or considering establishing or adding to a position in gold, silver, platinum, or palladium. Many people who have placed their faith and trust in precious metals as a store of wealth and a refuge during times of financial turmoil are sometimes frustrated and perplexed by the price action in the precious metals markets. In response to this, I would like to share my thoughts on the performance of gold and precious metals since the start of their current secular bull market that kicked off over 16 years ago. In the course of this review, I will share my opinion as to what the future looks to hold for precious metals based on what the data suggests and what is taking place in the world around us. Let's start by taking a look at the overall trend for gold that began at the start of the new millennium. Secular markets are long-term in nature and defined by an overall directional trend. It is not uncommon for a secular market trend to play out over a 20 to 25-year period. Within secular markets are periodic counter-cyclical markets. These counter-cyclical markets often have a duration which lasts several years before the greater secular trend resumes. Secular markets can be defined as either a bull or bear market for a specific asset class. As an example that is directly relevant to our interests, just prior to gold's current secular bull market, gold had gone through a 20-plus year secular bear market where its price peaked around $800 an ounce in 1980 and then turned around and headed down until it bottomed around $255 an ounce in 2001. The secular bear market for gold I just described did not go straight down. Within this period of price collapse were periodic counter-cyclical bull markets, like the robust rally that ran from 1985 to 1988 and saw the gold price shoot up almost 70%. Since we will be looking at some price charts for gold, I also want to address the subject of price manipulation. While it is a widely held belief that precious metal prices are manipulated and suppressed, these probable nefarious actions are generally effective only for the short and intermediate term or may delay but not stop the ultimate outcome. Therefore, due to manipulation which is most likely taking place, I believe utilizing charts for short-term forecasts is somewhat limited in value, but looking at the same data on a broader scale for the larger trends can be useful. Even with all the intervention and interference in the gold market, there is still a trend underway which cannot be stopped. Now, let's take that broad view of the gold market by looking at this secular trend underway and see what it is telling us. As we set out to do today, we're going to take that broader look at the price action for gold, and that represents an overall view for also all the precious metals. Here's a simple price chart of the secular bull market in play over the last 16 years. As you can see, it started around 2001 and is continuing to where we are today. Despite all the volatility, this market is still generally in an upward trend. To validate and verify that we are in this upward trend, we've added a long-term price support line. As you can see, unless the price of gold was to break down and break through the support line in any meaningful way, we could be relatively assured that the long-term secular bull market for gold is still in play. Another very helpful tool while looking at a secular bull market is applying something called the megaphone pattern. During the course of secular markets like the one for gold underway, the price for the metal or the asset generally becomes greater to both the upside and the downside, giving us a resistance line on the top and a support line on the below representing the look of a megaphone. As you can see, we're 16 years into the secular bull market and the price for gold is staying within the support and resistance line of the megaphone. So now let's take a look at where we are today. Notice the red circle. That's showing the price of gold over the last 2 years. Recently, gold came down off its high that it achieved in 2016, but it did not violate or break through the support line. This is critical because it's telling us that in all likelihood, the secular bull market for gold is still intact and underway. This is validated by the fact that this recent low in gold was still higher than the previous low in gold, or major low in gold, in December of 2015. Having bounced off the support line, gold is again heading higher. So this could be telling us something critically important. Also, This represents an excellent entry point, whether a first-time buyer or adding to one's position in gold and precious metals, as it is the most advantageous time to buy in the course of a secular bull market. Lastly, we're going to look at the all-important three legs. Major secular bull markets are overall defined by three legs. The first being the up, the second one down with a major retracement in the original gains, and the third, the last up leg, comes with a parabolic rise or blow-off at the end that takes the asset to prices that no one had expected. So, in our current secular bull market, we can see that the first leg was an 11-year term where the price of gold came off a $255 low, taking us to approximately $1,900 an ounce in 2012. Then we entered our second leg, which was the 3-year consolidation or counter-cyclical trend. Remember when we talked about the bear market for gold, which was 20 years in term, but had the counter-cyclical bull trend, which lasted 3 years? So we have basically the same thing in reverse. Now it appears in 2016, the bottom was reached in that 3-year counter-cyclical trend, and now we may have turned and entered the third phase. This is an exciting time and an ideal time to come in because the price appreciation realized during phase 3 of any secular bull market is the most dramatic, and highs are reached that most people have never anticipated. When investing in precious metals, remember that some of the same tactics that are smart to utilize when investing in other assets like stocks and bonds are also applicable to precious metals. The cornerstone for any investment portfolio is diversification, and that even applies within an asset class like precious metals. One way to capture the upside benefits of precious metals while smoothing out the extreme volatility generally associated with holding just one or two types of bullion is by building a diversified precious metals portfolio. A diversified precious metals portfolio means including positions in rare and highly valued metals like platinum and palladium in conjunction with gold and silver. Neptune Global has made buying, holding, and trading a turnkey, diversified physical precious metals portfolio easy and cost-efficient by offering the patented PMC ounce. For more information on the PMC ounce, call Neptune Global or visit the Neptune Global website. When you are ready to either establish an initial position in precious metals or are looking to add to your current holdings, please give Neptune Global a call. Neptune Global is a full-service precious metals dealer and leader in its field. Our clients have access to all the traditional bullion bars and coins and the unique advantage of being able to buy, hold, and trade the innovative and patented PMC ounce. Thank you, and come back soon for our next video report.